Good morning, everybody.
Morning.
Good morning, Rob.
Good
morning, Rob.
Morning.
Morning. So we got an interesting and a good session coming on today. Spent a little time this morning looking at some property investments and wanted to share that with everybody. So I want to see if our guest Dave Wainwright, are you on? All right, maybe not yet. Let me So has anybody had the conversation with your clients about investing in real estate without them asking us? And how did that go? Nobody, huh?
I don't get too many people asking about investments at this point. Once in a while, I do get them, but
So Ron, the question was the opposite. Have you had conversations with your customers about investing in real estate?
oh, I thought you meant did my customers approach me?
No. You brought to light the point I was looking to make. Is I think customers are avoiding investing in real estate now because of all the sentiment, which is not positive, right?
Okay.
But if there's investments that are worth having and we're not having those discussions, that's the point that starts what we're going to go over today. And let me pull up my screen here 1 second. David Wainwright, are you on? Okay, so here is my investment sheet that I created in about 90 minutes today. And I'm not an expert at the Beaches MLS, so I'm sure that there are much better investments available there. I just wasn't able to download and identify them.
Thank you. I'm in the middle of a Zoom course right now, sir, so this is not a good time to talk, but I'm all set. Thank you.
So somebody's getting a sales call. So I have one property that I identified in Florida, and I identified 5 or 6 from the NJ or from the Garden State MLS. And I had one of our commercial team identify a property from CoStar. And does anybody want to guess what do you think a good cap rate is in this market? Or who knows what a cap rate is from our prior classes?
I would say a good cap rate is about 7% in this market.
Okay, and Lisa, what is the cap rate? If I could put you on the spot.
It's basically what you make after all expenses.
Very, very good. So it's the return on your investment.
Correct.
And if you were to look at a cap rate versus for a piece of real estate versus a bond, what are some of the attributes to real estate that would be better than a stock or a bond, in your opinion? Or anybody can chime in on this, please.
Well, real estate appreciates, whereas and typically you don't lose your capital, whereas a bond, it's a little bit more risky.
The stock market is volatile.
Right. It's more volatile than real estate, right? And you have a hard asset in real estate. And in the stock market, you have a paper asset, right? Because you don't have anything that you can go to other than the piece of paper that's in your hand. If you have a 5% return on a bond, is there going to be capital appreciation on that? Like when the bond matures, do they give you more than $1,000 if that was a bond? The answer is no. It's not a trick question. And do you have tax advantages on investment income from paper assets? Typically,
No, you
you don't have
you
any.
do in real estate.
Correct. You have the availability to depreciate. And Lisa, I'm gonna, since you're the smart student this morning, what's the difference between the cap rate and the cash on cash return? Do you know that?
Let me think. I knew it, and I'm trying to figure out how to explain it.
So the difference between, I know you know it, and I'm sorry to put you on the spot. The difference is the cash on cash return would be, in the example here, number 2, we put up $135,000 down. Our total investments basically $150,000. If we get $7,500 return on cash for the year. That's a 5% cash on cash return. We make 22,500. That's a 15% return on our cash. And the difference between cap rate and cash on cash is due to leverage. Okay, because you're financing hopefully a majority of the investment. Does that make sense?
Rob, I don't think that we can see all of the numbers that you're quoting,
It's okay. We don't need to see all of them.
okay?
Let's see, the numbers go all the way down here. And I'm going to go over them individually, but I want the concept to be understood. So Robert, if I bought a house for $1 million and I put $300,000 down and I made $15,000 profit, okay, after all the expenses, that would be 15,000 divided by $1 million. That would be a 15%. Excuse me. If I had a 150,000, that would be a 15%. If I had a $15,000, that would be a 1.5% cap rate. Would be very poor. If I had the $1 million investment and I put down, but I just want to make the number simple. You can't do 100,000, but you put $100,000 down and you had a $20,000 profit. Okay, that would be a 20% cash on cash return. It's possible you could have a 7% cap rate and a 20% cash on cash return because of the fact that you're leveraging your investment. That makes sense? Okay, so in these examples here, and I'm going to actually see if I can pull up the property as well. So this is the first property. This is the MLS sheet. It was originally on for 1.2, lowered to $1,025,000. It's 4 2-bedrooms and 1 bath units in Pompano Beach. And I'm guessing that Northwest 7th Street is not the prime part of Pompano, but probably a solid rental. And with rentals of $1,600 a piece for a 2-bedroom in Pompano, which seems to be, anybody familiar with rentals in Pompano, Mr. Piccolo? All right.
They sleeping this morning?
And anybody? So I did some research. It looks like there are between like 1,400 and 1,900. So I applied a rate of 1,600 on this property. So if you paid full price, if you paid $950 on $1,025,000, a property that's been on the market for a long time, put 30% down, financed $665,000. Your monthly cash flow would be $1,462. Your annual cash flow would be $17,000. Your down payment is $285,000 with a total acquisition of $365, because I figured this one might need a little bit of cleanup. And 17.5 divided by 365 is a 5% return, rate of return. And this one has a 4.81 cash on cash return, and it has a cap rate of 7.29%. And the difference between the cap rate and the cash on cash return is due to the fact that you're paying principal back, which is forced savings into the reduction of the loan balance. But the good part about it is all I had to do was fill in these canary colored or these yellow colored boxes, and the sheet did the entire amount for me. And the annual profit with loan repayment is almost $28,000, and your annual rate of return is year 1 6.31. Your rate with your return with 3% appreciation is over 12.5%. And with 5% appreciation, it would be 20.5%. Did I lose anybody? Anybody getting this? Is it silence because the numbers?
Rob, what's the difference between the cash on cash rate and the annual rate of return? How do you get that spread?
So the difference between cash on cash and the annual rate of return is your amortization of the loan. So if you're paying, if you borrowed 800,000 on $1 million property and you put down 200 and you got $10,000 of cash flow, but you paid the loan down by 10,000, your profit is 20,000 because you reduced your debt. Does that make sense? But a lot of
Yeah.
people who invest in real estate ask, what's the what? Cash flow, right?
Yeah, that's
So
the
that gives
cash on
you-
cash rate with the equity return on investment. That's basically what you're saying.
It's the cash on cash plus the amortization.
Right, and you
Okay.
get that amortization by the investment paying that down over the period of time, correct?
Paying the loan down. That is correct.
Okay.
Rob, I just wanted to point out that Dave Wainwright is on now.
Dave, how you doing?
Yeah, I've been here. Thanks, Robert. Hey, Rob.
How's it going?
Good.
So I wanted to, I challenged Dave to come up with a simple property for us to understand that wasn't what's traditionally called residential property, because it's more than 4 units. Those typically go into the commercial arm. And Dave, where are those properties primarily listed?
In CoStar or LoopNet.
And how long did it take you to find a property that had a reasonable cap rate?
Probably an hour, maybe a little bit more. Some
Okay.
of these cap rates are listed on the website, but there's also still agents in CoStar that are inputting the property information that's not accurate. So I actually had to go back and check their math and check their numbers to see if their information was accurate, and a lot of them were not. That's what took the time.
Gotcha. So, good, Rob.
I was just gonna ask, is this form that you're using, is this something you put together? Is it something you can share?
Yep. It's
That's
something
doing
that,
all the calculations?
yes, I will share the form with everybody. I'll put a link into the, here. I'll put a link into the sheet. While I do that, I'm gonna have Dave talk about the property that he found while I clean up the sheet and share it, okay?
You're gonna clean up the sheet?
I'm going to give you a clean sheet without anything on it, as well as this sheet. Okay?
It won't have any sheet on it?
No, you'll have the sheet that has all the numbers on it, then you'll have one that you can easily populate yourself.
We'll be able to edit it, correct?
Yes, okay?
Okay.
So Dave, talk a little bit about the property that you found.
Okay, so spending a lot of time searching yesterday, the day before, I came up with a property in Montclair in CoStar.
Ooh,
And I went through their financials, and this person that input this listing, their financials were outstanding and to the penny and very well input. But this was an 8-building unit in Montclair for sale for $999,000. You stopped sharing your screen, Rob, right? Should I share mine?
Yeah, you can share yours. Yep.
You disabled that.
Let's see. Can you share? Okay, see if it works now there.
That worked? No.
Yeah, we can see it.
You can see the spreadsheet?
I see the spreadsheet. Yep, the one that I was using.
Okay, I'm not seeing it on mine for some reason. Unless okay. So are you seeing that move up and down?
Yes,
Okay, all right, so this property, 34 Union Street in Montclair, was 8 units, $999,000. Which is a really, really good ask price for this property. 30% down is about, just about 300,000. We have closing costs involved in here. Rob and I guesstimated for about 50,000 in improvements needed just to clean up the property and make it nice. It was a little dated. There's a lot of older buildings in Montclair, but the numbers are really strong on this property. We did a vacancy rate about 3%, which is probably a little high for today, but we threw it in there anyway. So we have total acquisition cost of 401,500. The mortgage 699. We're hoping we can get a rate at 6.75. We might be able to do a little bit better or a little bit more, but that's a good range. We took out all our expenses. Taxes, insurance. We added in rental increases for future projections. We put in a property management fee, which a lot of people don't do in their calculations, which anybody who's buying investment properties like this will want a property manager for sure, because they don't want to do it. The true investor. So we have a net monthly rent of $10,930. And we scroll down here to line 60 or 8, the cap rate. This has a 9.10 cap rate, which is very strong. This is a really good investment property. You see Rob's numbers, they're 8.3, 9.39. These are all really good numbers. An investor today is probably looking for about 7 to 8%. Back when the rates were lower, people were purchasing these properties at 5% cap rate, which is very low. So today, now that the interest rates are higher, a lot of these guys that bought large apartment buildings at a 5% cap rate, they're underwater big time. Some of those buildings are going to be foreclosed on in the near future. These guys are going to walk because they're so underwater. But anyway, just back to this building. This
So Dave, does that mean that you can get a better deal as a buyer now than you could when things were crazy with low rates?
a better deal as a buyer?
Yeah.
People will have to come off their price a bit. Yes, absolutely.
I mean, because the way the market's looking at it is if people are trading and properties are available for a 7 or 8 cap rate or a 9, that means that the deal is way better than it would have been 2 years ago when rates were at 3.5%.
Absolutely. It would apply more so to the large, 4 or 5 units and up, as opposed to 2 units, which are going for crazy numbers, and cap rates generally don't make sense on those valuations. But for buildings like this, yes, the prices have definitely come down. And this is one way to educate the sellers too on what their properties are worth.
Can I ask a question?
Sure.
So you have this based on future rent increase. What is the cap rate with the current rental income?
9.10.
That's with current, because I thought you said that you had added a future rental increase.
Correct, but that doesn't calculate at this number right here.
Oh,
It
so that
calculates.
9.0 is with current rental income?
That's the current rental income. The projections calculate in the 5-year projection categories.
And is this property taken?
It's not, it's available.
Oh, excellent. Can I PM you later for more information? Is that your listing?
It's not. It's something I'm
Just the
working
list.
on.
Oh.
So Mickey, Dave has the stuff from CoStar. Dave, you put your contact info in before you, I'll put your contact in before we finish this meeting. But Mickey, believe it or not, you can get a 9% cap rate in this market for an investor.
You can or cannot?
You can, here it is.
Okay, I'm surprised. I've been looking for larger cap rates. I have quite a few clients that are looking for 7 and up, and I have not been able to find it. But I'm mostly looking at 2 families. I haven't found many 3 families that look good.
You won't
So-
find it in 2 families. Very unlikely. If you do buy
I
it,
know. Right, I know. The demand is too high. Okay, great. And is it cold as in CO or GO? Gold Star, Cold Star, Gold Star?
CoStar,
CoStar.
very expensive to join.
Oh, okay. How expensive?
Thousands.
Oh,
Yeah.
maybe I'll piggyback on this particular one just to see how it works. Okay. All right, Dave, thank you.
You're
Great
Hey,
job
welcome.
on
Dave,
that.
Dave, is Dave JR11 your best email or no?
7 is the best one, but you can use 11. That's fine too. Whatever you have in front of you is good.
You know, I think, Rob, with regard to this, these larger units, for agents who are not familiar really with doing commercial, I mean, that's the beauty of us having a commercial division. And I think that the people in that division are very willing to help out if you need guidance.
Thanks,
Yes,
Robert.
so this property that Dave found in Montclair with the 9% cap rate, honestly, Dave, I think that with, what do we have? 59 people on the call here. I think half of these properties should be sold by Remax Select. What do you think?
Absolutely. And this is one of 3 or 4 that this group of investors owns, and they all have similar cap rates and are in the same area, believe it or not. So there's a few of them out there. You just have to know where to look.
So Dave, if it's okay with you, I'm gonna take the screen back for a minute.
Sure.
You want to just stop sharing? All right. So on this sheet here, literally, either you can look at these properties, maybe visit them. There might be things that I'm not seeing from the MLS to make them not as enticing as they look on the surface. But if you have 8 and 9% cap rates, I think we should be, reaching out. And this is the point that I want to, make to Ron and everybody out there, is your clients aren't going to be calling you in this environment saying, can you get me a commercial real estate, because they think interest rates are too high. We need to reach out to somebody, and here's what my call would look like. I'd say, hey, Dave, I just want to touch base. How's it going? Blah, blah, blah. Hey, had you had any thoughts about investing in real estate? Because I came across a couple of deals on my desk that looked pretty interesting, right? If Dave were to say yes, then I would basically go to the information that's on this sheet here. Get to it. And I would say, there's a property in Montclair. It's being offered at $1 million, $999. With 25% down, with a 30% down payment. You can see a cap rate above 9%. It's giving you an annual rate of return of 10.5. And, with some very conservative appreciation numbers, it's giving you a 19% all-in return. Okay, because you're getting the 3%. And this is actually really good, because your 3% on 30% is 10% of the entire amount. So just due to the way that rounding errors go, it would be a 19% return annually if you saw the property go up by 3% a year. And that would also be compounded. And the beautiful part about it is, there are some people who might think, oh, real estate's overdone, rents can't continue to go up, they're going to go down. This might not be the right investment for them. But if people believe, like I believe, that over time rents are going to go up, Dave, what's that going to do to the cap rate if rents go up 3% a year if you use your initial investment number 5 years from
Gonna bring it way up.
It's gonna kill the cap rate. It's gonna explode it in a positive way. Because
Absolutely.
every year your rents, your rents are going up, your interest rate is fixed. And as long as you don't default, the only way that your interest rate can go is down by an elective refinance, correct?
Yep.
So these are the conversations that, you know, once you immerse yourself into this information, you can have with your clients. Okay, and my passion is don't sit there and wait for somebody to say, I'm thinking about investing in real estate, because it's not going to happen. You want to review this. You know, if I were completely serious about it, I might go visit these properties ahead of time. I mean, what does it take? 3-4 hours to visit 5 or 6 properties? You might eliminate 2, and then you can tell people, I actually went through, I previewed these properties. You know, I'm pretty sure one of my clients are going to buy this, but I just wanted to make sure that you were aware of it and had the opportunity if you were interested. What do you think of that, Mickey?
I think that's a great idea, and I'm gonna make a phone call as soon as I see what the property looks like.
Great. So, and it's not, I mean, I went through about 300 properties, and I eliminated, was it 97% of them, and most of them were pretty easy to eliminate. And I came up with 5 or 6 out of the Garden State MLS. And it didn't take me, this whole exercise took me just about 90 minutes to put together. And Dave did the last property. So, you know, if you're in Morris County, there's 3. We have 1 in Passaic, 2 in Union County, and 1 in Essex County. So we have a diversity of areas where they're being offered. You can, and I don't know, Dave, if you've seen this, but if you go into more urban, riskier areas, you can get higher cap rates. But I think it's just a whole nother ball game. What are your thoughts on that, Dave?
Yeah, there are definitely some higher cap rates, but you're into Irvington, Newark, larger buildings, but you know, much higher risk and not.
I mean,
not
you really need to be a professional to go in those areas, right? In my opinion.
Yeah, professional and then some to have properties in those areas for sure.
Yeah, I mean, it might even be a little bit, you know, you might not want to go visit some of your properties, the ones that have, you know, ridiculously high cap rates, because there's a lot of, you know, risk associated with those properties. So I'd actually worked with an agent, and some agents, Dave, believe this or not, are superstitious. They don't want me to talk about their transaction they have pending because they're afraid it might blow apart. But I'm gonna
identify with that a little bit.
Huh?
I said I can identify with that a little bit for sure.
Okay, so the agent shall remain nameless, but I basically was talking to an agent about something completely unrelated to this. And he said, Rob, I'm trying to play around with that sheet. Can you help me with this? And we reviewed 3 properties in Passaic County that were in the 900 to $1.3 million range. And he got 1 under contract for $20,000 over ask. And here's what happened with it. We had I think it was like a 7.9 cap rate with that. The property was a 4-family, and the appraisal came in, they looked at it 2 ways. Does anybody want to guess what the 2 ways that they looked at it were?
Current comps would be one.
So they looked at it, the sales comparison approach and the income approach, and they didn't do, they have the cost approach, which is probably the least common one. So the sales comparison approach had it at about $100,000 below the sales price. However, the income approach had it at $142,000 above the price. So the appraisal said, for example, let's just say the price was $1 million. They said that the appraisal was 900 from the sales comparison approach, and the income approach was $1,142,000, and the loan could be based off of the lower of the 2. Now, I went back to the client or to the agent. I said, this is great. Based on the income, your client's getting it for 142,000 less than the income would support. Okay. And they're just working through the details. So there is a little bit of a snafu there, but I'm sure they'll work through it. But those are two of the different approaches that that an appraiser is going to look at. And I think it's probably good evidence that we found a good deal. Because everybody was looking at comparing it to the amount of square footage it was and saying it's only worth $1 million, but based on the income, it's $1,150,000. So there are these opportunities out there. And if you're an investor, you don't really care about what other comps have sold for. I mean, if you got a property as an investor that was 100,000 below what it would appraise for, but it loses money every month, do you think you can attract many people that want to buy that? I don't think so. But if you have a property that's going to cash flow and going to have a solid cap rate, I think it's a good investment that, people can be aware of. So anyway, this does happen. It is happening, and it should happen for us. And I really would like to see, us sell 4 or 5 of these particular properties from the people on the call today. And if you understand it, you can do that. I'm going to take a minute. Dave, you have anything else to share before I bring up another idea that I had?
Not really, other than thanks for giving me this opportunity, Rob, and that there's a lot of these properties out there. There's going to be more coming. You just have to know where to look and where to find them and how to do the math on these, which sounds like Rob has been showing you how to do that, but we're here to help. If you need anything, please feel free to reach out.
I mean,
Hey
Dave
guys,
is,
can I just ask you one question? On your analysis, the percentage of the mortgage money, I know residential, we get it from the loan officers, but on that 8-family that you had, is it the same price on mortgage money? Should we look at it the same way when we go with a loan officer, or should we reach out to maybe a commercial loan officer or something?
So Anthony, I'm gonna field that one. I'm gonna say that one is one where, if you don't have the comfort, probably maybe partner with like Dave or a commercial expert for the first couple of deals, because on the commercial side, the financing is also tends to be very different. You see 3 to 10-year fixed terms. So that means after 3, 5, or 10 years, the rate readjusts to market. So there's more sophisticated things than just like a 2 to 4 family where you get a fixed rate for the term. So sometimes you're able to get a lower interest rate fixed for a shorter period of time. And I know that that's not the simple answer that you wanted, but people who are buying in those areas tend to understand it. Would you agree, Dave?
Yes, absolutely.
Yeah, you
I
can't.
concur, guys. Yeah, I
You-
just
you
wanted to
can't-
make sure everybody understood that the mortgage money on the commercial end for that 8-family might be slightly different.
And I don't know where you could get a 15 or 30-year fixed rate for a commercial property. I just don't think it happens. And with some of the banks not managing their interest rate risks recently, Dave, it's probably even less likely to happen, right?
Yes, for sure.
So excellent question, Anthony. This is great conversation. I see we also have Rob Durso, who does a lot of commercial out of Middlesex County, on the call. And we have some other commercial people, if you know, that you can have conversations with. I also want to just take a minute and introduce somebody here. We have Ian on. Are you there, Ian?
Yep, I'm here. Nice to meet everyone.
Now, Ian ironically reached out to me, and he's a relative to one of our agents in the company. And he said, Rob, do you have a lot of business owners and self-employed people? Because I have something that might be able to benefit them. And this is not a sales pitch, but this is just giving everybody the opportunity to understand what might happen. Because Ian, what's the name of your company?
Real Capital.
And you work with what's
Bottom
the
Line Concepts.
Bottom Line Concepts. So Ian has helped some entrepreneurs and business owners take advantage of the ERC. And he said a lot of those people that were able to take the ERC were taking that money and buying real estate. So he said, Rob, why don't you at least let your agents know that if they have self-employed business owners, that this is a possibility. And, you know, if it works for them, they might buy a house through them and have a raving fan client for life. I don't know all the particulars. Ian's the expert, but I'm going to play about 1.5 minutes of a video that he shared with me, and then we'll give him a minute and we'll have him share his contact info. But if somebody was able to get $300,000-$500,000 from the business that they have without having a loan and buy a piece of real estate, that's a real game changer. And Ian, what type of credits have you been seeing with your company?
As far as what do you mean? Like the employee retention credits?
Is it 10,000 to 50,000, or is it 50,000 to 800,000? Like, what are the?
So our average ticket is about 170,000 per credit. You can get anywhere from $10,000 to $26,000 per W-2. And there's a couple different variables that kind of go into that formula to determine the amount you can get per W-2 employee.
So I'm not going to make it into this is not a sales call, but I want to play a little clip here just to give you an idea. And if it makes sense, you can talk to your sphere and your clients about it.
In light of the significant impact the COVID pandemic has had for many businesses large and small, the federal government has enacted various programs to help businesses recover. Have you heard of the Employee Retention Credit Program, ERC? The ERC is a grant, not a loan, that you can claim for your business based on qualified wages and benefits paid to your employees. How much money can you get back? You can claim ERC equal to 70% of qualified wages for 2021 and 50% for 2020. The maximum amount per employee is $7,000 per quarter in 2021 and $5,000 for the year total in 2020. Let's say your company has 100 employees and you took a PPP loan. We would be able to get you a total refund of approximately $1 million. How do you know if your business is eligible? Your business has to meet the following criteria: have been in existence since February 15th, 2020, and, based on the number of employees you had in 2019, have 100 or fewer full-time employees to claim ERC for 2020 and 500 or fewer for 2021. If not, you may qualify for some benefits as a large employer. In addition, either one of the following should apply to your business: fully or partially suspended operations or reduced business hours due to government orders. Experienced a significant decline in gross receipts due to the pandemic. For 2021, more than a 20% decline versus the same quarter in 2019.
So as you can see, and Ian, I believe it's not a significant decline and you're in limited hours, and it's like one of those criteria which would potentially make you eligible, correct?
Yeah, so when the program first started, there was really only one way to qualify, and that was a 50% reduction in revenue. But that's kind of been lifted, and there's multiple ways to qualify. So as you could see, any sort of disruption in business operation would kind of make sure that business owner would qualify.
Ian, can you put your contact info in the chat if anybody has any questions? And if for some reason you don't have it here and you need his information, you can just text to me and I can forward it to you. But yeah, I just wanted to, share this, and not, again, it's not, a sales call. It's an opportunity for you to tell somebody, hey, if you struggled through the pandemic with your business, you might be eligible for something. And if you are, maybe you want to buy real estate with it. Yeah, I can send the video in the email. Or as a matter of fact, Miranda, I'll put you in touch with Ian and he can share that with you.
Yep.
So,
Rob, can I just have 2 minutes?
I'll give you 1 minute.
Okay, really quick, guys. Again, my name is Ian Samlin, CEO of Real Capital. I've been in the financial sector for almost 10 years now. Started my own company with Real about 8 years ago. We thrive with kind of helping small and medium-sized businesses across the country kind of get funding in all elements. In addition to the short-term funding that we offer, kind of in the last 3 years, we've really helped the same businesses file for the ERTC credits. We obviously continue to hear reasons why our clients thought they did not qualify. And obviously, anytime we do hear that, it's a pleasure to help them kind of get the money they're entitled to. So guys, I want you to meet my partner, Steven Schaufman. He's just going to briefly 1 minute go over how this has been working successfully for other kind of realtors and industries like yourselves. Steven, are you there? Yep. You're on mute. You're still on
All right.
mute. Yep.
All right, so Ian, I'm gonna go back to what we have here. If people want your information, I'll forward it out, and if you could put it in the chat, we'll go from there.
Cool. Really appreciate the time, guys.
You got it. So everybody should have this in the chat that you can save, and then all you need to do is make a copy of it, and then you can edit it and you own it. And you have a clean copy that I put out here for you. Just fill in the canary colored boxes and it does all the math for you.
You can pull that from the chat?
Yeah, it's in the chat. And
Rob, can I ask a question?
It's in
absolutely.
the Google Drive.
Yes.
I'm sorry, I haven't done any commercial business yet, but my question is, on what line on that commercial spreadsheet would you be accruing for a new roof and or a new commercial AC unit, which are both very expensive?
So that would be under the maintenance item. You'd have to do an accrual. And I think, you're talking kind of the commercial language of like the 8 family and above. I think the 2-family type of a person is probably going to take a look at it and say, hey, what's the condition of the roof? And, maybe put aside some money in the initial acquisition cost. Okay. And I know like in Florida, roofs and ACs are a lot more of a prevailing problem, as is property insurance, correct?
Right, right.
So those are 3 challenges that you're going to see unique to the Florida market.
Rob,
Right.
it's Deb. In the chat, there's restricted access on it, so you have to change the access for them to be able to open it.
Well, no, they should be able to open it, but they can't do anything. They need to copy it.
No, you have to request access. I'm just letting you know.
Okay, I'll correct that. You know what I'm going to do? All right, go ahead.
No, I was just going to say, I wanted to just mention that I know you said earlier that some of the rough neighborhoods in Newark and Patterson and so forth are areas you don't necessarily want to go into. And it's not as bad. I mean, my husband has done it for years and has done very well in those neighborhoods and managing anywhere from or running anywhere from 20 to 30 unit condos, apartments. So it's not as scary as you pointed out to be. We've bought and sold properties and made a lot of money on them.
But you need to, I think, Mickey, it's another layer. Maybe that's the 3rd property that you buy, not the 1st. Maybe you buy something with a little bit of a more conservative cap rate, and you kind of grow into some of the more challenging neighborhoods to navigate through.
Yeah, no, I'm just saying that it's not as scary as it may have been portrayed. That's all.
So there's 2 of the sheets there that you can click on, and you should be able to copy those, and you can edit them and own them yourself. Just rename them. I'm going to, in the next 4 minutes, I'm going to review a couple of the other properties that are on this sheet, and then I'm going to open it up for questions. So for any of our Florida folks, 200 Northwest 7th, a fourplex, 950. You know, my insurance number might be low, you know, my maintenance might be a little bit low. So if you're really interested, you might want to, you know, go a little bit more granular on it. But on the surface, it has a 7.3 cap rate. And with 3% appreciation, you're talking about a 15%, you know, annual return, and a 5-year cash return. You get 35% of your money back in the first 5 years. So I think it's you know, worth considering. I'm not saying it's a solid investment. Here's a really simple to understand property in Bud Lake, a 2-family. I did eliminate everything that was on septic and well, because that's an extra complexity, especially for an investment property. And this particular one was a 7.4% return. I think it might be a reasonable investment for somebody. It looked like a clean property. This one in Chester, I was thinking was really juicy. It's 579. And the challenge with this one was the taxes were more than double what the property in Bud Lake was, which, you know, hindered the cap rate on this from being incredible to just being decent. The 8% cap rate. And if you look on the sheets here, I put some factors that I found that were interesting to me in analyzing the property, which was this property here in Mount Arlington looked to have below market rents on a 6-family. And I looked up the rental values and I looked at the pictures without inspecting the property. It looked like the property was listed for rent for below market. And then 2 of the last 3 had beautiful 2-car oversized garages, which you could probably rent out for $400 or $500 a month, which greatly enhances your return. So those were Clifton and Rawway. And this property in Kenilworth is currently vacant. So there was no cap rate. I had to do the rental comps and determine that on my own. For family in Kenilworth with an ask price of $845, and I think it's 4 2-bedroom units. Looks like a pretty good deal. But again, you'd have to check the property out. And I even put the MLS numbers there if you're interested. And here's one on West Grand and Rawway. And West Grand and Rawway was much lower cap rate of 6.5. So that one probably is not going to make the cut. And, you know, if you have a little bit more of a sophisticated or an investor with, let's say they were looking to pay $500,000 for cash for a property, maybe they can put 30% down and buy a property like the one Dave introduced us to in Montclair. So does anybody have any, you know, questions or any comments on these properties? Like, anybody want to go out and sell them this weekend?
I do.
So Anthony's gonna make some calls. And do you think that you know, Dan in Florida and Anthony and Mickey and Rob Durso, like this would be a good excuse to give somebody a call and say, I have a couple properties literally right in front of me that look like they're pretty good investments. I want to see if you had any thoughts, right?
Absolutely.
And I will tell you that there's two groups of agents in Morris County that, you know, after our last class, I guess it's a year and a half ago, I've bought 2 to 3 properties as investments since then using the sheet. And I don't know how many they sold, but they literally one bought 2 and another agent and their spouse bought 3 investment properties from the conversation August a year ago. So it'll be 2 years this August. And Lisa, I see that you want to send the one in Florida. I would also maybe get together as a small group and see if you can come up with some properties yourself. And I don't mind helping you analyze them on the spreadsheet and having the conversation as if, you know, I'd help you to present them, and then I can have a conversation if I was a client asking you difficult questions so that you know how to answer them.
I would like some of that help as well.
Okay. So Mickey, you found your cap rate here, right?
Yeah, in that property. I'd love to find something in Bergen County. I have a lot of people looking in Bergen County specifically.
So, Mickey, my challenge with Bergen County is I'm just not as comfortable with the MLS. So if you wanted to, you know, make an appointment, we can do a screen share or even get together and you can help me be more efficient with the MLS. I could, you know, help you come up with properties up in Bergen County because I am certain that they do exist. I just didn't know how to extract them as efficiently as I did in Garden State MLS. And
It's too
Rob,
funny. I feel the
sure-
same about Garden State. I'm much better with the NJ than Garden. Okay.
I'm sure
I will
that
definitely properties.
I'm sure that our Monmouth County and Rob Durso probably are really comfortable with their local MLSs to find these properties. So my outcry is to, you know, talk to 5 people in your sphere. This is what I would do. Talk to 5 people a day, have some properties in hand. Tell them, hey, you know, I have a couple of interesting investment properties that, you know, if I was in the market, I would be buying, or maybe you will actually be buying some yourself once you do this exercise.
You know, I
Any,
just wanted to say this is a really excellent opportunity for people that are looking to invest. The only thing that I've ever seen that comes close to this, Rob, is a CCIM course I took probably 20 years ago. So thank you.
would the group be interested in like a workshop for this? Like if you are, just put in the chat. Yeah,
1000%.
Heba, this is recorded. If there's an interest, I could put together a workshop where we could analyze properties together. There's nothing like doing it, right? And I see a lot of people saying yes. And I was even thinking about having my own little certification for RE/MAX Select, like a real estate investment expert select designation. So maybe Rob Durso, you could help me to roll that out, and we can get everybody comfortable educating their sphere and their clients so that they can make the right decision. Because I think a lot of people don't invest in real estate, because of fear, right? It's not as easy to trade a piece of real estate as it is a stock, right? You buy a stock, it's easier to just hit sell. Real estate's not that type of an investment, but it does have a lot of favorable attributes.
You just have to put it in front of them in a package with a bow and make it happen. You'll make a commission, and you'll probably keep a client where you'll be renting the apartments for them and other stuff as well.
Fantastic. And then I'm going to make one other announcement here. I have a team leader, Julie Vanderblue, with an independent brokerage who runs nearly a $300 million team in Connecticut. I am going to be hosting her on June 14th. It's going to be a team leader summit in Florham Park. So if you are interested and you're running a team, you can contact your manager or look for an email. And I would say it's worth attending. I don't know, is anybody on the call that took the trip to Connecticut a few months back? Do we have any team leaders who did that trip? Leo, you did the trip, right? I think the Hayeses did. So anyway,
Rob,
yes.
yeah,
So
she's a star, absolutely incredible.
I think, her coming here, to have access to 15 or 20 of our top talented team leaders, there's just going to be a tremendous exchange of value and ideas. So if you're a team leader, June 14th, I think it's a Wednesday from 11 to 2:30. Just make a mental note of that and look for that invite coming out. Okay. So everybody have a productive weekend. Glenn, thanks for sharing that tidbit, and let's add some values to our clients and make some money along the way. Take care, everybody.
Have a good weekend.
Take care,
All
Robert.
right, bye,
Thank you.
guys.
Bye, guys.
Thank you.
Bye-bye.